Multiplan, atuando com criatividade e pioneirismo nos setores de shopping centers e empreendimentos imobiliários. Nos anos 80, a Multiplan inaugurou os primeiros shopping centers regionais no Brasil, contribuindo para a urbanização e o crescimento de diversas cidades. Nasciam novos hábitos de consumo e de lazer. Muito mais que empreendimentos de sucesso, espaços inovadores para fazer as pessoas felizes. Hoje, a Multiplan possui 20 shopping centers e 2 complexos de torres corporativas em diversas regiões do país, somando 6.000 lojas em 930 mil metros quadrados de ABL, sempre com uma filosofia: surpreender, ir além, entregar muito mais do que as pessoas esperam. Por trás de uma marca está um grupo de pessoas que ama o que faz e por isso cuida de cada detalhe para fazer a diferença. Todos os projetos reforçam a estratégia da companhia de crescimento constante e responsável, sempre com foco no consumidor e olhar atento ao meio ambiente e ao nosso planeta. O universo Multiplan nunca para de expandir. Multiplicar oportunidades, resultados e, principalmente, sorrisos. E é fazendo a sua vida melhor que a Multiplan faz um mundo melhor.
Good morning, everyone. Good morning, everyone. Well, it's a pleasure to have you all here at Multiplan's house in São Paulo. Much better than the call that we're just talking to a machine. It's great to see you. It makes all the difference. And exchange ideas, to have a conversation. I believe that this is the idea of the public meeting. So I prepared a few notes. Quick notes. I don't want to take too much time because the presentation is self-explanatory and you're going to hear a lot about what we have developed over the last 3 years. Well, as soon as I started as the president of Multiplan, I started with a plan on how to take this company to another level of efficiency and attractiveness to its assets. We thought and discussed internally what would be the best application of these resources for the next 5 years of development. We've got to the conclusion that the best return on investment for the shareholders would be to expand the shopping malls that had the capacity of receiving expansions, revamping the assets, and developing the real estate of terrains where we had the best return. 2.5 years after this moment, we have 70% of this plan concluded. We've developed the expansions of Diamond Mall and Park Shopping Barigui last year. We are concluding another 3, Morumbi, Maceió, and Brasilia. This year, we will also complete the cycle of revamping of our internal full portfolio. And we've advanced in the building and development of Golden Lake in Porto Alegre. Until the end of 2026, what we plan to do in 5 years will be done in just 3. We will continue with working with efficiency and transparency at all levels in this company. And as I say, it doesn't matter that we are the biggest. We have to be the most profitable. With this spirit, we've done the biggest M&A after the listing of the company last year, when we purchased 50% of the participation of a partner, and all shareholders benefited from this acquisition. For the future, we will continue to be trusting that there's still much to be done in the company so that we reach other levels of efficiency and profitability. Without forgetting that there are still many cities that have the capacity to develop multi-use complexes that mark our history. So I would like to leave you a message to everyone that is watching. Our mandate is to protect the company and to remove it from any risk that might appear in the future. Thank you very much to our collaborators, shareholders, investors, market analysts, journalists for your trust. Thank you and have a nice day. Good morning, everyone. Well, it's difficult to see everyone here from here. Yeah. I thought that I was going to be able to see you all, but I know that you're all there. Well, it's a great pleasure to be with all of you at Morumbi Shopping. Once again, good morning. It is with great satisfaction that I share the solid results of Multiplan that reflect our performance, operational performance that was robust, and growth that is expressive in the sales of tenants that overcome the retail. In retail, they go over the threshold and sales of the other stores in Brazil. We are investing on the long term in capitals, in big developments through the multi-use complexes that integrate the shopping malls, the corporate towers, the residential towers. So we increase the synergy between the assets. We have an experienced management of integrated systems that guarantee efficiency and predictability. We keep high margins and low delinquency and indebtedness that is aligned to the average rate and a competitive cost that ensures the solidity, financial solidity for future investments. Looking up ahead, we see a lot of opportunities for growth, the increase of opportunities and profitability, and also expansions that were launched in other things that we already showed. Besides the valuation, increase of value in the regions that we work. We also invest in innovation with the app, multi-app, and we are reinforcing our commitment to providing differentiated experiences for our clients. That is in that way that Multiplan is structured to generate a sustainable growth and consolidate itself as a reference in the real estate sector and shopping mall sectors in Brazil. So, I wanted to summarize. This presentation traditionally has a lot of people that are watching it for the first time. So the first slide, you can just see our properties. We have a portfolio with 20 shopping malls. 18 of those were developed by ourselves since its inception, and two towers, commercial towers, the two commercial towers. Besides the development of a real estate multi-use, big 250,000 square meters of private area, which is a Golden Lake, that we're going to mention a lot throughout the presentation. It's almost Brazil here, 200 million people that go to our malls every year. We have a DNA, as I told you, for developers. Our company has celebrated 50 years, so we have a track record, a performance that is proven all throughout this half century of experience. We have a team that is very much focused, and more so. We manage our malls every day, 24/7. We are managers, hands-on, and Marcelo is going to tell you a lot about this. This result, very quickly, let's talk about the stability of results. In one of these conferences some time ago, I found an investor of a long, long time ago. And I said, well, you're not going to come? And he said, no, I don't need to. You're like a Swiss watch. I see the results. I know that you're getting with my projections. I'm very happy. I don't need to bother you. I continue to be a happy investor. So that's great. And recently, I was reading an article that said, pay for stability. And I said, how much they pay for stability? How much is embedded in the valuation of our company, this predictability of results that they can present? And many times I see the analysts saying, well, this is a great result. Congratulations. How do you do it? We do it with this, with focus, having a structure of people, having a long term vision, having the consumer as our main target, over 6,000 stores that we try to add value. Once again, as Marcelo has said with his experience with the multi app and more so. Well, let's go to the slide and focus on the right. We are going to compare the slides with the data of the Shopping Mall Association of Brazil, ABRAS. And what I want to call your attention to the slide, we've shown it many times that it's very relevant, is the participation in the shopping mall industry that has grown year on year. You can see shopping mall is opening here, here and there. You grow the GLA, you grow sales, you grow. Well, those of you that hear me for many years, I say retail grows inside of the shopping malls. We have the development of the cities, we have the development of the real estate, and we lack space on the street. Can you imagine that you decide to do a new investment and you open 200 stores? Where do you have a space? So retail grows in the shopping mall, and we have a slice of the pie that is ever bigger of the sales of the shopping malls. Our shopping malls are selling more. And when we see another data, which is how much we have of the GLA of the shopping mall sector, you can see that it decreases even a little bit. So this is what we're trying to have with our intense active management and the quality of our malls. Well, in this slide, we try to show you in a post-pandemic period and also comparing with the data of the Brazilian Association of Shopping Centers, how much we've grown. The shoppings in Brazil, the street stores, restricted retail, and shoppings Multiplan, 64% in Multiplan. And you can see that the street retail grows only 19%. So it proves that our strategy, our intensive work has provided results. So we have here, for the first time, our festive data, the most frequent ones, more famous, that gives you better results. And we're comparing them. I'm not going to mention everyone, but Mother's Day, Valentine's, or Father's Day, you can see how the performance of sales at the shopping malls, they compare again with the shopping industry in Brazil and retail in general. Here we continue. Still with the festive dates, the Children's Day, Black Friday, and Christmas. So a day traditionally where retail online predominates on Black Friday. So online retail is the question that I hear the most in 2020. As Eduardo said, well, the retail is going to be online, yeah, for 6 months. But what happened afterwards? You've just seen the strong recovery of sales. Once again, we compare the growth of the sales of the shopping malls of Multiplan. They're growing with a CAGR of almost 18% once you compare it to the sales of the e-commerce, 10.6. So we can see that we're growing faster. And how do we grow faster within the markets itself? So we have a penetration rate, the slide that we just shown here, growing 291 basis points, almost 3% against the e-commerce within traditional retail that just grows 82 basis points. So once again, our strategy to promote, last year we had 1,300 events in our shopping malls. This management of the mix, that curatorship of mix, generates results that are strong for the tenants and for our shareholders. I'm not going to go over this slide, but for those of you that do not know a lot of the details, top is Ribeirão Shopping in 1981, which was a farm of sugarcane, and it became a big city. This shopping mall has over 10 expansions that were done, right, Marcelo? 10 expansions that were done to get to this size. And recently, we've done sales of terrains that are adjacent to the shopping mall that will provide a new push, a new growth of the real estate itself. So we are planting the seeds with the sales, the growth, and the opportunities to continue to grow in the future. This is just so you can see in another way. One of the ways that you can present results all throughout time in an ever growing fashion. When you do a wise investment in the past, you choose where you're going to grow. What seemed that didn't have any growth, and in future, in the middle of the farm, it became a big city, and we see the fruits of our labor. And this is just one example of many that we could give you right now. This is reflected in data. We can see it with the census in Brazil. We're taking the population in the city, the area that we are, where the shopping mall is, or the income, or the IDH, or the development index, human development index, and we can see it how it's comparing to the rest of the country. We're growing faster. We've made the correct investment in the growth. Talking about growth, we were just discussing the real plan of the monetary real plan. And then we take that time and then we stabilize it and we can show you the crises. Well, crisis is good because the other ones believe, and then you invest, or the crisis is good because there is a great opportunity for investment, or worse, waiting for the crisis to go over so you can grow. So you're going to be sitting down because we try to always bring one of the most famous crises. There were many others. There was a lot of more information in the slide. We simplified it in this line in the middle, which is the GLA of the company that grows throughout time. That vision of the future allows us to do this. How many times we're in a meeting with investors? How do you think it's going to be the GDP? I have no idea. And well, what about realist? What about retail? I don't know. But what I can talk to you right now is what are we doing to grow regardless of the scenario? This is what we're trying to seek every single time. We're focused on the consumer, generating value, seizing the opportunity, and making our shopping malls better every day. And then you can see on the next slide, what have we done all throughout time? These are the projects that were delivered all throughout this time, and also the variation of the Ibovespa index. Oh, it goes up and down. That's a shareholding. That's the stock exchange in São Paulo index, Ibovespa. So we're working with caution, with the correct use of the capital allocation, trying to get the best returns to grow and generate value for our shareholders. In this slide, we can show you, since the listing of the company, we changed the date to 2007, July 2007, 18 years ago, we were listed in the stock exchange of São Paulo. And you can see the variation of our share, 371% valuation, when Ibovespa is keeping 154%. That 371%, we can subdivide it between the valuation, which was 223, the valuation of the share, and the other one is payment of dividends and interest over capital, 148%. So the most impressive numbers are not here, are on the top. We raised 2.7 billion reais with the primary offering and 3 secondary offerings that we've done. But we've returned to the shareholder 7.1 billion reais through dividends or interest over capital and repurchasing of shares, and the 544,000 square meters that we developed all throughout this period. Well, let's change and talk about results. This is a slide to show in a very summarized way what we have done in 2024. I'm not going to go over numbers by numbers, but just to give you one number, 47,000 square meters of turnover. It's bigger than Morumbi Shopping in 1 year. Besides the expansions, another 110 stores in the Diamond Mall and Park Shopping Barigüe. So just you can see the work that was done just last year to generate the results that we generate. Here is a slide that the analysts are going to start taking notes. try to show the sales in April and May. During the call, Eduardo mentioned that our estimations for April was growing 16.3%. In those few days that were the end of April, there was still one additional percent with 17.3% in sales. May, a growth of double digits and 14.6%. This makes this occupancy rate grow and the delinquency drop throughout time. This gives sustainability. How do we do this? With everything that we identified before, with hard work, improving the mix, of making better malls every day, of promoting events, of the curatorship of the mix. This is an old graph for those of you that have been following us for many years. We can see that we're bringing this graph. Well, this is the very well known graph, which is the difference between the income of rent and then the cost of occupancy. Well, a question that was asked over the last, well, mainly last year, of the cost of occupancy. Well, the cost of occupancy of Multiplan, is it sustainable? Do you think that you're going to keep growing? Many times when you see this on the short term, well, look at the long term, actually. You can see how we're going. So we took, once again, since the listing in 2007, base 100, to show the sales and the revenue of allocation. Well, we are going to multiply by the inflation, the GLA. You can see that our rent grew more. The valuation of the points within our malls, our enterprises brought value, and it made that growth of revenue over allocation, overcoming sales, and overcoming the own GLA. The cost of occupancy, it dropped from 14.9 to 2.8, 12.8. And it grew, it's an opportunity to grow more, to charge more. And how did it drop? Because it dropped because the sales came up? No, not just that. It dropped because of efficiency. Equipments were changed so we can be more efficient using energy. The model of management, all the areas in the shopping malls, they adapted for the use of technology. And this is what Eduardo said. This is what we're seeking at all times, every day, 24/7. So let's talk about towards the end of the presentation. Very quickly, debt, the presentation. Well, tomorrow we have Super Wednesday. Let's see what will come from Coupon or the Fed. But anyway, so the average cost of the debt is 14.81. Today, the Selic rate 14.75. The net debt 2.8 times, 2.28 times, aligned with our records. That was 3 times. It was 1 time in the recent past, and with the schedule of amortization of debt that is absolutely handwritten. So it's handwritten in the sense that we don't want to have any risk of refinancing. We do not like to have a big debt that is due, that would compromise our freedom to invest, the freedom to take opportunities and to use the best capital allocation that we can do is our differential. Once again, results of 12 months, not the result of last year, even though there is an influence. You can see these gold medals are records of a company that is 50 years, that was listed 18 years ago. It's not simple to beat your own best record. So we have to beat our records and present expressive numbers and margins that are very high. An operational margin, or NOI, of 92.7%, or a margin of net income 51.4. This is really good. Well, I wanted to mention an idea. Something that happened to me. Well, we were on a plane and I was talking to an investor, and then he told me, look, a business with an EBITDA margin of 70% is for very few. And I said, thank you. Ours is higher. How much is yours? Well, the last one was 74, 75%. It's very nice to see these numbers. So this is the number that I like the most because it's not a quarter, it's not the last 12 months, it's the record. This is since 2007. Here is the size track record that is enormous that we're delivering and showing to you, and that we're growing year on year. We've had a period on the pandemic that made that trough, that hole. Otherwise, this graph would have been more harmonic, more balanced, and upwards, reflecting the great work of the company, reflecting that the capital allocation of the company and what it does, it generates value in our shareholders. Talking about capital allocation, last year we had the record capital allocation, 3.6 billion reais allocated in a single year. This first quarter, we saw a small reduction, and we hope to have a reduction in the capital allocation, of course, comparing to last year, but we are preparing the company for a new cycle, new opportunities of investment up ahead. Where the capex of revamp, well, this is a very frequent question over the last 15, 18 months. Well, you're investing a lot in improvement of the shopping malls, and we're going to talk about this. People will comment with you and will show you in practice the effects of these revamps, showing that in this first quarter we reduced a lot what was last year. And last but not least, the last slide is to show you. Do you remember the first slide that I just showed you? Our portfolio. Well, the opportunity is unique that we just had in capital allocation. For those of you that think that things are luck, there is no luck. There is a bit of luck, but there is preparation. We prepared ourselves. We were deleveraging the company. We were preparing for an opportunity of investment that could be, and X opportunities. M&A market is very strong. You saw opportunities of developing. We could have done an X amount of capital allocations, but we managed. Well, there is a saying that says time is essential. The time worked out, and we did the allocation that brought us a bigger return. It brought to our shareholders a better return. So we can purchase a part of every shopping mall at a cap rate that is 11.9%. And in May, when we closed the presentation, it was 10.6, and still with a potential that is tremendous once you compare it to the average record of the discount rate since the listing of the company of 7.8%. Another way of seeing this is to do the math. And okay, this way is great. You have 2 billion reais of working, but the interest went up. Well, where you were was 10 and a half, it went to 14.75. Well, we did the math. And the share until May valued 21% gains, a great valuation, and generated for our shareholders after the carryover a return of 361,400,000 reais, showing the opportunity that we had this big investment, this big repurchasing in terms of return. Consequently, you see in the cash flow CAGR per share a very important positive impact through the canceling of the shares, generating value for our shareholders, which is the objective of the repurchasing. To finish, regardless of the growth of 21% that we've just seen and the price of the share over this year, I am still shocked when I see this type of slide. And we do this every day. we see every day, we follow every day to understand where we're going, what is happening. So what have we done? Here is another story that people are tired of hearing me out, but the sector is called, is a good proxy. It's an equivalent of a real, well, I don't feel like a proxy at all. We are not a bond. We are not compared to a debt instrument or maybe even a convertible with an equity or kicker, something that generates more value, because the fixed income is to rescue, but we continue to grow and generate value. So when we see throughout the recent history, 10 years, the NTNB longest one, and we compare it with the yield of the operational cash flow, and we've seen that we got periods that we were less profitable by the NTNB, and this is explained by the growth that we are delivering, that we're announcing, that we're building, that we are doing. And even so, it's still negotiating the share with the biggest spread that we've already negotiated. So I stop here. I'm going to call my colleague Marcela Martins to continue the presentation for you. And thank you very much. Good morning, everyone. It's a pleasure to be here in this morning to discuss a bit of our strategies and our day-to-day. The great data that Armando has just presented to us are the results of a very close management and very present in our shopping malls. So, in all the chain of collaborators, of the operational base of the shopping malls, until going up to the presidency of the company, with an objective, with a direction that is very clear and permeated by the chain of the company of doing the best every day. And this, nobody can, well, it only depends on us to try and improve what we're doing. This is our mission, depends on us. And this is a bit of what we're going to see here. We have 4 points. 4 points of this management that we're going to explore. We're going to discuss our reworks, the events that were done in the shopping malls, the importance of the mixed management, and of course, the multi-super app. Before we talk about the revamp or the rework, we have to consolidate the understanding that while the maintenance is part of the day-to-day, operational day-to-day of the shopping malls, with resources of the condominium that is charged of the tenants and that are for keeping the appearance of the shopping mall and keeping the operational safety and surety, the revamp, the rework are resources of Multiplan that are trying to update the assets with the trends and technologies that are more modern to make them more attractive for the tenants, consumers, and consequently increasing its valuations. In 2023, we started a plan that was more robust, more intense of revamps that should take 3 years, and practically all of our assets were revamped. 19 of our shopping malls went through an intervention of rework. But nothing that I can tell you here can represent better, and we'll be able to better transmit what were the transformation of these places than the video that we're going to show you all, and I invite you to watch. It's impressive because much more than reworks, we did the transformation of these malls. And even though there is experience and our experience in identifying the unmet needs and their implementation, we also try to hear our clients spontaneously when they talk to us, when they bring suggestions, or going towards them and hearing them so we can implement our actions. An example of that is we've heard at the end of February, beginning of March this year, we've heard 3,000 consumers of 5 of our malls that went, are still some of them going through rework, and the results were excellent. 90% agree that the changes that we're doing with the reworks are, you can really notice them. More than 70% evaluated positive in a positive way the change in the mix, and 60% said that they want to visit the malls more often. But also in this research, and this is data that is very gratifying to us, that 9 in 10 clients have demonstrated satisfaction or are happy to visit our malls. Regardless, the number that calls our attention is not this. We are obsessed by excellency in our installations and service in providing services. And the number that provokes us is the 11% that are still not satisfied, but they will be satisfied. Our work is exactly that, to identify and correct and improve what is necessary to try and get the 100% satisfaction. Multiplan has always invested in the revamping of its assets. In the 10 years that were before this very robust plan that we implemented in 2023. So from 2013 to 2022, Multiplan invested 4.5% of its NOI in the rework of the malls. And of course, from this beginning of the plan that was more intense, the values have increased. This year of 2025, the number will be much lower than 2024. When we conclude this plan, that should be done in 3 years. We're going to have all of our portfolio reworked, renovated, ready for the next decades, and mainly more attractive and more up to par to capture more results. Now, talking about better results, we have to bring a good example, a great example. Let's see Barra Shopping. It's a shopping mall that is mature, consolidated, with a record of number and results that are very strong. And still, with the reworks, it delivers 40% growth in the sales, a growth that we recorded in the first quarter of 25 when we compare it to the first quarter of 2022 before we start the rework. But these reworks are not only important for the clients, where the clients are moving through the external environment, but it also has, we're modernizing the equipment. We're bringing more safety, more efficiency with less operational costs. Here's the example of the modernization of the cooling system of Diamond Mall, that in the first quarter delivered an economy of energy of 40%. Less operational costs, less condominium costs that will be passed on to the tenants, consequently, more space for capturing better rents. And not just this, many initiatives of trying to find this efficiency. For example, the utilization of intelligent sensors in environments and equipment that seek energetic efficiency and anticipate the necessity of maintenance so we don't have operational stoppages so often. Going through process reviews, self-generation of energy, many ways that we can operate better at a lower cost. Here, once again, we see on the timeline And even though we have the climate issues that are ever more aggressive, we see an economy and the consumption of electricity in our shopping malls from 2017 to 2023. Well, events. This is not a new theme. This is not a new strategy of Multiplan since its inception of the shopping malls 47 years ago. The company brought attractions that would be marked throughout history. The most experienced here, maybe remember a few of the 80s and 90s. Eva, Cartel, well, Disney, the Miami Dolphins, things that were landmarks. And our challenge is to fill out the as best as we can the yearly calendar with activities, and we can have better events every year. In 2024, as Armando mentioned, we had almost 1,300 events. It's an impressive number. We have here a few examples of events that were done throughout 2024. We have an example of every quarter, different malls, and events that are smaller, shorter term, but still, they are important to see the impact that we have in the results of the shopping mall when we are doing them. We've had events that grow the sales of the shopping mall in over 40%. But this result are consequences. The events also have a fundamental role with the relationship of the community where the shopping malls are inserted. They create memories and they strengthen the economic and the connection with our clients, emotional connection with our clients. We have a compilation of the events that we've done over recently in the shopping malls. Please watch. It's very nice to be able to provide opportunities of meeting places in our shopping malls. This is great for the community and the families where we are. So more than reworks of the environments, it's a continuous management of the mix of the shopping malls. We try to anticipate the new trends of retail and the changes of behaviors in the consumers, and we work to offer the best options for our shopping malls. In 12 months, Armando commented this number. We've gotten to 12 months, considering March of 2025, 12 months year on year, we substituted over 470 stores in one mall. We have a great example of this. You can see on the slide, maybe the best example, which is the expansion 7 of Barra Shopping that was launched in 2014. And that since the beginning, the launch, over 50% of its area was occupied by the clothing activities, After 10 years, that occupancy is 16.5%. And now we have space for new activities such as food courts that went from 10% at the beginning and now occupies 40% of the area. And today, at the expansion 7 of Barra Shopping, 70% of the area occupied by segments that are for experiences. Here we can see the distribution of these food courts that were added and restaurants, but besides the amount, it's distribution. It's important not just the amount, but the localization and the placement of these food operations in the correct place so we can have a balanced flow and we don't have a concentrated flow in any region. But this work that was done, well, this activated this area more. Could we activate more, bring more people, more foot traffic? Here is the heat map of the foot traffic of the clients in 2021. We can see very few areas with an intense flow, a great deal of the area with a smaller foot traffic, cold areas, and it was a place that we needed a correction to improve the mix and bringing more clients here. This is the same graph in 2024. After all of these additions, all of that modification that we've done of mixes in the area, today we see the full area with an intense flow and it's balanced, an intense foot traffic distributed throughout its area. The more foot traffic, the bigger the sales, and consequently, better results in rent. So 2019 to 2024, the expansion 7 of Barra Shopping grew almost double the growth of sales of Barra Shopping, where the portfolio of Multiplan grew 47%. Also, not that the numbers of Barra Shopping is less, but the expansion was very high, very robust. And the revenue of rent growing above the average, growing above the portfolio of Multiplan, grew 66% in this period. Last but not least, let's talk about Multi, our super app, which is the main gear of our digital strategy here at the company. With a clear objective of improving the experience and the journey of the clients, we accumulate impressive numbers. 8.5 million downloads accumulated, 20 million visits to the app in 2024 alone. Multi grows, strengthens, and consolidates as a platform of services, convenience, relationship, and a repository of data that is important for the decision-making process. Ours and our tenants. We will see later why we have our tenants here. And what was before the strategies of value creation of Multi, today we have the fifth, which are the possibilities of generation of revenues. With frequency, they ask us about the monetization of Multi, but it delivers already a revenue. In the development of the axis of Multi, which was a project of removing the of automating the entry of the parking lot of the shopping malls, we've integrated the tags to the project, and they are payment methods for the parking. In 12 months, we stopped printing 30 million tickets of parking. And the data that go through Multi, how much are they valued? That data. 2020, we've taken a next step where we migrated the registering of the invoices for Multi. By itself, this measure brought it's easier to manage by the clients, and also the shopping malls are gonna have a new channel that has the new program with Multi Você. We have over 4 million users registered, and over 20% of the sales that are done in our shopping malls go through the program. that offers 2,300 benefits in over 600 stores. And we have a new functionality that was released to our tenants freely as the loyalty program. The demographic profile of well, it's a dashboard that is being built, heat map, convergence of different brands, consumer behavior inside of the mall, and we are going to briefly make this available for the tenants. The product is a success, and 30 days after its launch, 40% of the tenants of Multiplan have accessed and used this product. Here, a great example of monetization. There is no better example than this. This is a powerful tool for the tenants to improve and increase their sales. And the best monetization of Multi is the shopping malls growing its sales. Growing the sales in the shopping mall is the best way to monetize our app. And the bigger are the sales, the better are the conditions to improve the rent and improve the results for our shareholders. This is what I wanted to share with you. Thank you for your attention. And I give the floor to my colleague, Marcelo, the VP of Development of the company. Good morning. It's a pleasure to have you here. Let's talk about what we've done last year in regards to the development of real estate, shopping malls, and going back to our history. What are the three main vectors of growth of the company since the IPO? Since the launch of the company, what are the three main vectors? Through acquisition of participation. So when we listed the company, our average participation was 30% in our shopping malls. Today, we get to 80% of average participation in our shopping malls. Greenfields, 18 of our 20 malls we've developed ourselves, and expansions. In our story, over 50 expansions that were developed and over 20 since the IPO. And why do we focus on expansion in 2024 was an example of this. Many factors that I will explain to you since increasing while creating the fortress, right? We want to create fortresses in our shopping malls and have to inhibit the competition and attract more people. Increase sales, decrease the condominium costs. We can see the pictures of what we have done over the years. For example, we launched at the end of last year, Diamond Mall and Park Shopping Barigüi, two expansions that are extremely profitable and fruitful. The variation in sale in Diamond Mall, 30% of 1 year against the other. Barigüi, Curitiba, 20%. Not only that, parking has grown. Parking growing 30% in both malls. The flow of people growing in both malls. The expansions are very important because they dilute the condominium costs. You can see that our revenue or expense per square meter dropped 22% real since the IPO. Why? Because you get more fractions, you get more stores, you decrease that condominium cost. As Marcelo said, bringing new equipment, new efficiencies to the shopping mall. Still, the unite areas. A very typical example is Barra Shopping in 2003, 2004, that we connected New York City Center to Barra Shopping. And after this connection, the sales of New York grew 67%. So we unite synergistic areas. Another example is what we're doing now in Maceió. Maceió, there is a multi-use project on the left. We sold several lots for developers of commercial and residential towers. We're going to have several towers, and also a hospital. Residential, we have 3 or 4 ready. And the blue part is the expansion that we're doing now with a connection of this expansion, 35 stores that are going to be launched, 6,000 square meters are going to be launched at the end of the year, 6,000 square meter of GLA. Here at Morumbi, another case of integrating areas. That expansion you can see, it was in the old deck park. We broke down the deck park. It's in blue. We're going to have the combination of Morumbi Corporate to Morumbi Shopping. We will launch the on Mother's Day next year. We're going to have it launched, and it's 90% located. We have the rooftop also that we're going to mention. Another integration is Park Shopping Brasilia. On the left, there was Park Shopping Corporate, two stores, a deck park, and on the right is a Park Shopping. So that expansion in blue will connect these two areas. It's an expansion in 2 levels with 65 stores. Besides, they improve the mix and they bring new experiences to the consumer. It's not doing the same of, but we have to do different. Medical centers, restaurants, children's park. At Morumbi, the issue of experience of the consumer, it left from 50% and went to 60% with our expansion. A bit more of this expansion of Barigui that was in November of last year. Fun with a hot zone. We did an external park, an internal park, new ceiling, the new ceiling, a lot of food opportunities, food courts, new lighting, Diamond Mall, another expansion that was here. We changed the characteristic of the mix. We got high quality brands, the floor in wood, and these expansions, they come with reworks. As Marcelo mentioned, we did the rework of the shopping mall as a whole, a new entry, new restaurants, and we culminated with the increase of sales that we just mentioned. Today, we have 3 expansions, 27,000 square meters of GLA, but not always GLA reflects the construction. Full construction. Today, full construction that we have is over 130,000 square meters of intervention areas in the shopping malls. It's a lot because it includes reworks, expansions. All of this gets to 130,000 square meters ongoing. Maceió, 5,500 square meters at the end of this year. In August, some pictures. In August, we delivered the spaces for the tenants so they can start their work so we can launch at the end of the year. There's going to be a Coco Bamboo, the first one in Maceió, very well located. Morumbi Shopping. This is where we are today. We have the rooftop that will be 7 operations of restaurants and high-end food court launching in the first quarter of next year. 13,000 square meters of GLA and 35 stores. Some pictures of the current state of the works. The rooftop on the right. And in Brasilia, a next expansion that is connecting the corporate to Park Shopping to the shopping mall. And we're launching in the second semester of next year, 8,600 square meters, 65 stores, and we started the construction 2 months ago. Let's talk about the other arm of growth, which is Golden Lake, the enterprise in Porto Alegre, 20 residential towers. It's 600 meters to Barra Shopping Sul, where we've done Barra Shopping Sul 3 buildings on the left, 2 commercial and 1 residential. And now we're going to do 20 residential at the Golden Lake. We started a great deal of the infrastructure of the neighborhood, the tennis courts And until the end of the year, we're going to finish this part of infrastructure of the neighborhood. And this is the time lapse of the construction that Multiplan is doing of the 4 towers of Lake Victoria that we're going to deliver the units in July. This is the construction from Multiplan. And we have 72% of the units sold. These are 300 square meters until 550 square meters. Big, average value 6 million. And we launched at the end of last year Lake Erie. Smaller units. The left is 180 square meters, 2 per floor, and on the right 4 units per floor with 120 to 130 square meters. Very well accepted. This tower of the left is 70 some sold. In total, we have 55% sold of these units. Well, let's call Vander to finish and talk about governance. Thank you very much. Yes, let's show you the video of Golden Lake and the expansions, complementing what Marcelo just showed us.
Um cotidiano iluminado pelo sol do Guaíba. É um mundo à parte chamado Golden Lake, a poucos metros do complexo Barra Shopping Sul. Bem-estar no dia a dia. Energia em cada esquina. Vida em movimento. Uma rotina para quem ama experiências únicas. Aqui, o ar é mais fresco, a paisagem é mais bela e o espírito é mais leve. Com vista deslumbrante para a Orla do Guaíba, o primeiro bairro privativo de Porto Alegre resgata os prazeres da vida de bairro. Uma estrutura completa de lazer, esportes e bem-estar, formada pelo Main Lake, o maior lago balneável da América Latina. Wellness Center, para um cuidado mental e físico no seu dia a dia. Beach Club, onde a praia vem até você. E o Golden Park, com quadras de tênis, bangalô e Golden Kids para todo mundo curtir. E tudo isso ainda nesse ano. É o local perfeito para as famílias viverem de um jeito extraordinário. Para iniciar a vida no bairro, é no Lake Vitória, o primeiro condomínio do Golden Lake, onde o tempo passa diferente, permitindo que se viva tudo o que a vida pode ser. Composto por 4 torres e com apartamentos de 299 a 543 metros quadrados, as obras já estão em fase final. Aqui, cada cômodo é um convite para viver momentos inesquecíveis. E seguindo a expansão do bairro, já lançamos o segundo condomínio. O Lake 80 é um verdadeiro convite para viver o exclusivo. Com apartamentos de 127 a 186 metros quadrados, com 3 e 4 suítes e elevadores panorâmicos inéditos com vista de tirar o fôlego. Sinta-se em casa pelo bairro todo. É um novo jeito do Porto Alegrense morar. Bem-vindos a um Porto seguro e alegre.
Well, good morning, everyone. To me, it's an immense pride and joy to be here with you. And looking, well, I kind of want to live there. It's an incredible project. I went there the other day to visit, and I went to one of the apartments. And, you know, with the view that you have to Guaíba, it was a beautiful day. I invite you to go there and visit because it's worth it, mainly for the people from the southern region of Porto Alegre. And here, good morning to all of you, almost good afternoon. But we have hundreds of people following us, not only the people that are here at the Multiplan Theater here at Morumbi Shopping, but everyone that is watching live. So for many, it's a good evening because we have investors in many places of the world. So people from Asia, good evening, and people that are in the good afternoon, good afternoon. So I salute all of you to our board members that are here, to our president, chairman of the board, all the team of Multiplan, and in the name of women, our we have Livia, the superintendent of the shopping mall, that kindly prepared this very special theater so we can talk to all of you. I like to say, well, first, I love doing what I do. And for every company professional, it's a privilege to really like what you do. And I think that everyone that works here at this company really have an additional dose of emotion, of happiness, joy. And that's why you see, as Armando has demonstrated, solid numbers and a consistent growth with the equipment here, as Marcelo has shown, the amount of events, the being working with our clients, and Marcelo Barnes brings everything that we're doing in terms of development of our projects. And I do an analysis, and this is a great orchestra, and we are working with our maestro Eduardo. And every day he tells us that we should do everything with quality, with safety, for those that come to the shopping malls, for the collaborators, for the investors, for the entirety of the ecosystem. But when you see these images and these pictures, there is a series of other actions that they don't appear in our balance sheet, in the number, in the fine print of a text or the numbers themselves. When you see an evolution around the shopping mall, sometimes people ask, well, how do you do this? I'd like to give you an example, which is the most recent, which is Parque Jacarepaguá. which is a shopping mall that we launched in November of 2021 that was built during the pandemic. And during the pandemic, you heard that, well, the shopping mall segment, it's not going to prosper. E-commerce is going to advance. And Armando brought you the numbers of how, comparatively speaking, the numbers of the company and they evolved mainly in the post-pandemic period. Even though the curve of evolution is historical, the business is under development. So this shopping mall was built throughout the pandemic and it was launched in 2021. What happens in a philosophical matter? When you launch an equipment, you have in Jacarepaguá 5,800 direct jobs. In a 5-kilometer radius is where you're going to have most of these jobs being generated. 80% of them are going to be in a 5-kilometer ratio. So you start to, in a way, allowing people to have their health plan. They can pay for private school. And there is the effect of the broken window theory. There was a program that was developed in New York a long time ago when there was a reorganization of the city. And this effect ends up happening around the shopping mall. Because what is that theory? Since it's a controlled, clean environment, then you start to export concepts of citizenship for the surrounding area. So you have an increase of income around because you inject a lot of jobs. You have an interference because we have a dialogue with the communities where we are present, because many times industry builds a wall with the safety and doesn't dialogue with the surroundings. And it's a prerogative of our equipment, of the company, of dialoguing with the surrounding. And usually you have an art, so you start to export the citizenship concepts to the surroundings. So you interfere in your surroundings. Jacarepaguá, for example, the municipal school, Can Robert, that was reworked by the company, or the we have all those equipments, public connectivity with the surroundings. The company interfered directly in the improvement, and they continue to dialogue with these institutions that are belonging to its surrounding. With this, you see the development of the surrounding improving. And this is a big social program, and this is a big program that is real and that is part of the culture of the company. So for the programs to be real, they have to be incorporated in the culture of the company. And this is what this company does in its history for half a century, which is incorporating these values that really make sense and interfere always in its surrounding, seeking improvement. These are social projects that are truthful and dignifying. That's why you see these transformations in real estate. Of course, the mix, the income that you inject, it develops throughout time. But if it was a company that didn't have any legitimate concern, this wouldn't happen. It happens because it's incorporated in our culture. So we need to preserve and develop this constantly. All of this, with this improvement of the surroundings, you have to do more and more, giving the conditions for the preservation or being a big ally of the environmental preservation. Here are some numbers of the increase of technology in regards to realization of water, the lighting, the changing through LED, the solar panels, Village Mall, and the headquarters of Multiplan, which are serviced by photovoltaic power, and all the energy of the company, it comes from renewable sources. So this is a concern, constant concern, that the equipment is evolving throughout time. Of course, the most recent, such as Park Shopping Canoas, where we could, and Park Shopping Jacarepaguá, where it was possible to install these solar panels in the structure of the roof, because there are more recent constructions, they made it more viable. But even in São Caetano, in an area of the parking, the company has this concern of preserving constantly not only its surrounding, but also its equipment. And this generates efficiency. As Armando has said in its presentation, the efficiency that the company will have will impact in the occupancy cost. So besides preserving nature, it brings benefit for the equipment. Here I'm just going to illustrate a few data of the company, and I'm going to tell you. The company, it was the pioneer in the creation of the first women's space that is in New York City with an association with Quartz. It's a program that is associated to the Ministry of Justice, because in the post-pandemic there is more domestic violence cases. And we realized that women were concerned of reporting this and exposing that situation at a forum which are more hostile environments. With the creation of a space such as this in the shopping mall, with the help of lawyers and police officers and social assistants, it was possible to create this environment. And today women have an opportunity of being at a place that they feel more at ease. At the last election, the regional elections court was low in the biometric registering, and that could interfere in the electoral system counting of the votes of the country. So it was from a point that we assembled at Barra Shopping that we could accelerate the recollection of the fingerprints so that we would be at acceptable levels for the program as a whole in the country. The blood banks, when the blood banks, many times they drop their stocks, they look for our shopping malls, and here at Morumbi Shopping, there is a truck that comes and stays, so they can replenish many times the levels that are lower. And a case that is very good of what the company does and always looking for the social aspect was what happened, unfortunately, at Rio Grande do Sul last year, which was the floods. And they hit harshly the surroundings, not our equipment, because engineering of the building of the equipment of the company was thought out while going back 100 years ago, because they would predict situations of public calamity or climate effects. So here, besides the donations that require a process, there is a sequence, the non-perishable foods. Many people sometimes they donate a bag of rice, but the individual lost the house and the stove. So there's no logical sequence. So we understand many times how to help and in which way we can help the surrounding affected. The hospitals and the public schools of the city of Canoas were servicing potable water from the artesian wells of Parque Shopping Canoas, because the public system of water had collapsed. So the most, in the sense of help, what the equipment, the shopping malls, they interfere and they contribute to its surrounding, were that the airport Salgado Filho in Porto Alegre was non-operable, and it was for months non-operable. And besides the issue of tourism, aviation transports a lot of products that are extremely needed. Organs for transplant and medications. And in that modal, if we didn't get the planes landing, it would affect the population of Porto Alegre. So it was from Parque Shopping Canoas that we transformed it into an airport. And it was a pioneering case in the world because it received 3 letter, the IIA 3 letter, which is KNS. So if the individual would fly from Narita, Japan, NRT, they would fly to KNS, park shopping. Of course, it was just the handling of the operation. The track, we use the military base of Canoas that wouldn't have any conditions of providing logistics, the arrival and exit of the passengers. So these are examples, small examples, and several ones. We could stay here hours and hours and hours talking about the contributions of the company that are legitimate, and they are in our timeline. If we see throughout these 50 years since the inception, well, we have many contributions that are legitimate and that are incorporated in our day-to-day. But all of that, we have to do it with safety, with governance programs that are robust. We have a team of internal auditors, and this Eduardo highlights a lot over the last years. Our concern, the zeal per assets by governance, by administration, so that we are not uncertain about our actions. And if we have doubts, we have to create redundancy in the process, a process that is additional, so that we have all of this type of, we have an independent board, we have the auditing committee, the ethics channel, the HR channel, so that the collaborator, the one that is working, can expose their ideas, and also the external channels. So it's of no use if we have all these concerns with the social, if we are presenting all these wonderful projects, all of this issue, if we didn't have a solid governance and robust governance, it would be of no use. We have little time. We are short on time. We are close to lunchtime. And to finalize, let's show you a video now that summarizes some of these initiatives of the company. And then we're going to have some time just to reorganize our space, and we're going to do the Q&A session for those that have any questions. So I apologize for any failure. I have a flu, and even the mix of Morumbi shopping, it's complete. I'm going to go to the drugstore, and I'm still going to have lunch, but we will see you shortly. So, no questions for us? Well, let's start the Q&A session, and I'd like to remind you that we're receiving questions online by the RI email of Multiplan. I've received a few, and also we're going to have questions from the audience. I invite the analysts, inside, outside, journalists, and to ask a question, just raise your hand, present yourself, comment what is your company, and limit to 2 questions. Here is the first question. I give you the floor. Andre Mazzini, Citibank. Thank you for the presentation. First question about that data that you had on the performance, your performance and the rest of the sector was always above the sector. The share of sales is higher than the shares of GLA of you versus the sector, but until the pandemic, it was flat. You had 8% of sales and 5% of GLA. Post-pandemic, there is a new graph, and it goes to 12% of the sales with 5% of GLA. So what do you think that happened in the post-pandemic for you to gain shares of sales and you didn't have an increase of GLA? So maybe e-commerce that ate more of the sales of the world's shopping malls, or is there anything else? That's the first question. The second one, greenfields. I know that you still have the greenfields, but talking about the demographics, which is something that you enjoy. In the last census, the Brazilian population grew less. The CAGR grew at 50 bips, so 0.5% of growth over the last 12 years until 2022, when was the last census. So it seems very little. Can you do greenfield even with a population that is almost not growing? Thank you. What is your name? Andre Mazzini. Thank you for the question. Let's start by the last one. Sure that we can grow. We can do greenfields. And I think that there are several cities in Brazil that deserve a complex as the one that we are used to doing. I'm going to give you the example of Maceió, where we purchased a terrain of 200,000 square meters. We did a lot that is very big with success, shopping mall. So I would like to be able to repeat that in different cities. I think that you do not do greenfield, and this is more connected to the performance of the company, of the economy of the country, than the growth of the population. When you do a shopping mall, for you to be successful with a greenfield, you need to have a growth perspective of the economy and an optimism of the entrepreneurs. It's not the moment that we live right now. Not that there is pessimism, but there is a lot of doubt, a lot of uncertainties. And that makes it difficult for the development of the greenfields. The first question that you asked about our participation on the total sales, well, I can only imagine that after the pandemic, as everyone that works with the mall could survive the pandemic, we learned to operate better. So you see that there is an intensification of the events. We changed the mix as well of the shopping malls very strongly. We see the curve of the mix that is very different. Today, a third of our GLA is destined to clothing, and in the past, it was over half. So it's a different way of doing shopping malls. You don't see this very often, but I believe in that. And to complement what Eduardo said, and Andre, since you've been in the real estate, you, for so long, you remember 2015, 16, 17, there was a lot of questions changing the big stores, for example, electronics with by experience in the shopping malls, restaurants, more services. And here there was a question if the revenue of rent would continue, would follow up the clothing stores leaving. And this proves the historical records, the revenue growing very strongly. And I believe that we were substituting operations that ended up selling products that online was easy to replicate. You research television, a more commoditized product, buy things that are non-replicable, such as experience, being here at a theater live with you, having good restaurants. I believe that that was a factor that started way before the pandemic, but that maybe intensified a lot in the post-pandemic because people saw that they needed to live, that we needed to intensify their experiences. Armando, to complete, there was a movement also of the company that during the pandemic, the company was the pioneer in the help that they gave to the tenants in the inception. It was the exempt that it was a way of helping within the productive chain so that they would go back very quickly. So this gesture in the post-pandemic, that was recognition by the retail with the pioneering attitude of the company at that time. Yes, and I believe that the success that the company has in the improvement of the experience of the consumer of the shopping mall. This is something that we are, and it's essential to do this. Can you hear me? Well, I want to understand what do you think about the capital allocation in this scenario of high interest rates? You explained the avenues of growth. What is your mind in terms of M&A, expansions? This is the first point. And secondly, to talk about the firepower, to seize the acquisitions and understand the level of leverage that you would like the company to run. Well, what is your name, Ivan? Igor? Okay, thank you. 50% interest rate is not the ideal environment for you to buy a lot of stuff. Well, I don't feel very at ease to do this. We did investments that were aggressive last year. There was 3.6 billion. We purchased a participation that is expressive of the company. Armando was mentioning just a piece of the shopping mall. Well, 15% of our participation in Morumbi is 9% of the shopping mall. So it's not a small part. We purchased a lot. I'm not enchanted by the idea of being daring in an environment that we're living today. And I saw a lot of entrepreneurs in Brazil being being daring and losing it all. So what we've done, what we are proposing ourselves to do, and here with the capital allocation, to finish building what we built last year. It's not little. We have today 240,000 square meters of building. Just at Golden Lake, 100,000 square meters that we build. I didn't hire a company to do this. It's our employees that are building. So this demands from the company a bigger effort. We have a better margin because we're doing it this way. So the capital allocation is focused on this. Oh, is there any space to purchase participation in another company? Well, we always look at the full, the whole. There wasn't any opportunity that went by that we were not paying attention, that we didn't study. And we've done the ones that make sense. I think that the best opportunities are in-house. So we've discovered and we looked at many things far away, but we developed what was close, what was in-house, which is safer and better for the company. So a question from the internet, and joining a few, there was, could you comment on how do you do the turnover of stores? How much of this happens actively or passively? And another one with Pedro. How does it work, the decision-making process in regards to the mix of tenants? It's something top-down that comes from the headquarters, or is shopping by shopping decided locally? Well, thank you for the question. I think that this is a process that is done forehands. The shopping malls have an important role. They are at they have the contact with the consumers. The shopping malls have a role of identifying the tenants, local brands, and the company as well has an area of planning of mix, of intelligence of mix, along with its commercial area that is seeking brands not only in Brazil but also outside. And connecting to the second question, and I'm going to understand that that the tenants are looking for us for movement happens in both directions. It's fluid. We talk about mix management, and many times it's not a substitution. Sometimes a tenant is in an inadequate place, it's the inadequate size at the shopping mall, and they need to have a different position, they need to increase their size. So it works both ways in a fluid way, and all take part in this movement. Good morning. This is Maria Angela from Itaú. Thank you for the opportunity of asking a question. I cannot see you. Right here. My site's two questions. We had a series of deals last year. Eduardo commented 500%. With 50%, you don't feel comfortable to buy, but you were in the selling part, even with some shopping malls. Do you see space for this type of movement, selling part of the assets happening again this year? And also in regards to the expansions, how much the investors can expect of new expansions besides the ones that are announced? What do you see in the space of the assets to continue to expand in 2025 or the years ahead? Sorry, Maria Angela. I mean, selling is not schedule. Is something that we have in a cash flow, or let's do X sales per year. It can happen. There are several provocations because now you have a big interest rate, so people are less excited, and the value that we're seeking, that I attribute to my assets, mainly the premium assets such as Barra Morumbi, it's not exactly what the market is ready to pay. So that thing that you do of selling is something that happens sporadically, an opportunity to have better capital. But you're going to miss out on the revenue in the future. So when I look at the assets, it's so difficult to build a shopping mall, to mature the shopping mall, to sell them. It doesn't make sense. It's not something that we have in the pipeline and it's going to happen. No. If it happens, it's by accident. And another one is in regards to the expansions. Yes, we have several expansions. If we still have São Caetano, Jundiaí to expand, and they have the cycle of 7 expansions that we would like to do, we're not going to do these now. I want to see the result of the election to be able to advance, to see how Brazil is going. And maybe Brazil is not going to change a lot, but this is going to change. But we're not going to stop with these two assets. The capacity to expand, I can double the size of Barra Shopping. We have that potential. The shoppings of Belo Horizonte, all of them I can double the size. So Village, we have the expansion to do. But you need to do this step by step. Otherwise, you get too many stores in the market and then the price drops. And there is a lot of stores in the market. It's a big bargain in the hand of the tenant. So I rather complete and increase the shopping malls as we consolidate. It seems that I am inventing the strategy. No, this is growing and consolidation. And going back to the beginning of the company, in 5 malls, my father could have had 15 malls, but he preferred not to do it because I rather have 15 malls that are doing so and so or 5 that are doing great. Here it was always that choice. Let's do this management that is good and deliver the best experience possible for the consumer. Mariangela, to give you a number on the several expansions, we've identified 200,000 square meters of expansions in the portfolio with projects and that are well defined. So from there, we have more expansions. Brasilia, Park Shopping, we had an opportunity that was identified by Eduardo, and the 200 square meters, we've seen 20,000 square meters, another 30,000 coming up, 10 were not there. So we have roughly 150,000 meters identified in-house of possible expansions of our portfolio. So to complete all the names that Eduardo has given you. Good morning. Thank you for the presentation. I'm Fanny from Santander. 2 questions. First, in regards to the new functionality of Multi. So it really brought my attention the possibility of you publicizing in a macro way more details of those that are going on the shopping mall with the tenants. What is the monetization? It would be an additional charge or a service provision for the retail, for the tenant that is along with Multiplan? That's the first question. Second question, it really brought my attention that change of the mix, the positive impact that you had in Barra Shopping, in terms of increase of flow and traffic. But I wanted to understand, in negotiation with a tenant, is it different to bring a tenant a store that is more focused on experience versus a store that is somebody that is selling merchandise and not clothing? What changes in this negotiation? Thank you for the question. Well, it's a different approach. When you bring restaurants, in the case of Marcelo, and the expansion had a lot of retail and less food courts. And today we understand that that food restaurants is anchoring. Purchasing clothing, it's not always, but you need to, get 3 meals a day. So we are, it's mandatory to do these changes. Otherwise, we're not going to get results. So you need to have space to do this type of investment. You get a restaurant, sometimes you're talking about 2-3 million for them to be part of the investment. You do a part, they do another. And they pay you with a percentage of their sales. Is that profitable? Very. If it wasn't profitable, we wouldn't have the income that we would have. So it's sustainable and it's good for the shopping mall. To do this intervention, you fix the mix of the shopping mall. If in the expansion and in the mix of a shopping mall that is not doing well, you cannot do this movement due to lack of resources or impossibility in the or because and the shopping mall is not doing well if you don't do this. The first question about Multi. We thought about this. We thought about ways of monetizing multi. And I believe that the best way is what Marcelo has shown. Today, 20% of our sales go through the loyalty program. So I want to believe that tomorrow we're going to grow above everyone because of loyalty. Multi is not just when we created multi. Let's go back to the idea of creating multi was to take Multiplan inside of people's home. And what year was 2018? So we did a marketing trend and we called and how it would be the shopping mall of the future for Asia, Dubai, whatever. And that Multiplan has to be everywhere. Well, and then we had a lot of examples of was a part of the shopping mall that would go through the city. Well, this is not going to work. And I thought that the best translation of Multiplan being everywhere is through multi. So it decreases the amount of people that works in the shopping mall. It facilitates your entry in the shopping mall. We be making these data available for the tenants. I don't want to charge this. I believe that if they sell better, they're going to value their positions. And this is where we're going to win. So we are here. Everybody remembers that my father was still the president of the company, and I was the one that gave the idea. Oh, let's do the automatic parking lot. I almost got hit. And he said, "You're crazy. You're going to bankrupt the company." No. There is a way of doing it, and we did it it's not mandatory to use multi to take the shopping mall. If you want to pay physically, great. The whole world does it differently. You go to Disney, you cannot do anything inside of the Disney if you don't have their app. But that's not the path that we wanted to trail. I want to let the consumer decide, not impose. Well, Richard is our director of innovation. This is data of May of 20%, where the data is a growing curve. And correct me, 58% growth. First 5 months of this year, we captured 58% more sales that were captured in the 5 months of 2024. So the trend is to grow and expand. And one of the things that I realize, and one of the things that really helps me as an operator and administrator of the shopping mall is living close to the mall. I live at Barra da Tijuca and I go to Barra Shopping and Village. And I see people around me. Oh, sometimes in lunch, people are fighting, my wife including. She's taking part of the loyalty plan, and this is very good because this journey didn't exist before. When we started, way back when, we bought a company, we lost money, and then everything was wrong. It was selling products. No. We restarted, we reassembled the ecosystem that is different, and today we have multi being a champion of growth. And last year, it was the 8th app most downloaded in the Apple Store in its category. So I think that the strategy is correct. Question from the audience, and then one online. Good morning. Sergio Vieira, journalist. Wanted to ask you, Eduardo, and following up on the comment, if you can comment on the interest rate. Well, you didn't feel comfortable following this line, purchasing and acquisition. Does this mean that this year can be different than last year? You said 3.6 billion. What is the perspective? And we have the announcement of the decision of Copom. What is your evaluation? I wanted to hear you about the 14.75. You defend, you think that it's going to drop, that we get to the peak. And the second one is, do you complete the strategies that you design for 5 years in 3? So I wanted you to explain this plan. Okay, Sergio. Well, no, I'm not an economist. I am the son of an economist. I studied administration. It's we should have Gustavo here. Predicting the interest rate is not where it is by chance. It had to go to this threshold because of the level of expenses and the size of the public machinery in the country. It bothers me and everyone. Me as an entrepreneur, every Brazilian should be bothered by this. And the country has to do its homework of decreasing the size of the state so that we have more for investment. And I think that technically the interest rate is where it is because it has to be at this threshold. I'm not rooting against or for it. It's technical. So the climbing and the decrease of the interest rate is purely technical. So what I want is that the public machinery of Brazil's would be lower than it is right now. So we cannot, guesstimate of what Calipolo is going to do. I hope that they do the homework as their predecessor did, and we're going to live in an easier going time. To realize 3 years, what was projected in 3, what we were doing in 5, well, this is the DNA of the company. We are dissatisfied by nature. We're always looking for excellence in everything. And recently, I was reading a biography that really influenced me. And we have to find the best way of doing and the most efficient way, most efficacious way. And we've been perfecting in this. And I think that this is what allowed us to do what we had scheduled, to do 5 years in 3. If you're going to have the opportunity of seeing the expansion of the shopping mall, we started 2 years ago, but the project is 20 years. So while it's on paper, you can tear it down 1,000 times. But when it becomes concrete, you have to know what you're doing. So it might seem, oh, it's easy. Well, pay attention to what we're doing. It's very complex. We use carbon fiber calculations if we are transforming the areas that were parking lot in areas of store. So it's an engineering that is very complex. We have Marcelo, we have Julio, and they can confirm what I'm saying. We've advanced a lot. And sometimes I look at Multiplan and I look at it as an engineering company. In the end, we are a company that is a company that is selling an experience at the shopping mall. This is what I'm selling. And this is our specialization. There was a third question. Interest rate, you talked about 3.6 billion last year. If the rate in this percentage, you said, well, would that not allow you to follow up on this line in this year? And this interest rate, does it affect the the consumer here at the shopping mall? It's difficult in a country that I started to work in 1988. I've been for 37 years at Multiplan. 88 to here, we've seen everything. Inflation, 50% a month, and people continue to consume. I don't think that it affects. And we've had, well, the consumption grows. I think that it affects the real estate. It could be doing better than what it's doing. Even though we're doing well with Porto Alegre, other projects that we have of real estate in the country would be leaving the paper, but I don't feel encouraged. What I think is the interest rate that is influencing is in this long-term investment. This year, we're going to invest less because of what we invested extra last year. We got 2 billion more in the purchasing of the 15% of the Canadian partner that wasn't in the plan. So I'm going to have to decrease in the rhythm of investment, but still it's going to be high. Just so you know, today we are developing and building 240,000 square meters of area. Expansion, buildings, the whole. Well, I've tried, well, there was a lot of questions online, but here is a question of Enrique. Still aligned with the question that we've discussed. There is a target threshold for the leverage of net debt and EBITDA on the medium term. The repurchasing of shares generated returns above the CDI. If there is space in the balance sheet, is there new space for repurchasing in 2025? Yes, we are always observing the market, observing the opportunities, and seeing what is the best capital allocation. If we understand that repurchasing is a good allocation to bring the return that we want for our shareholders, why not? Regardless of where the interest rates are, the leverage is, we're always going to evaluate. In the first quarter, we repurchased more shares, regardless of the fact that we've done another 2 billion reais in the fourth quarter of last year, or throughout this last year. Good morning, everyone. Taina from UBS. I wanted to go back to the issue of acquisitions and in the context of capital allocation. I think that the answer to the second question of Eduardo brought my attention in 2 points. First is a scenario of 15% of interest rate is not ideal to buy anything. And I wanted to understand how these two talks, they talk to the selling of stakes and the two assets, which is Barra and Morumbi. There is news, and how these two talks they talk amongst themselves, and in this context, how would you have the analysis measure? It would be price, quality. Well, do they talk to each other? No, they don't. And it's not because the partner A, B, and C. So we have Patrick, Barra, Morumbi. If we participate, is nominally. There's no big outcome from that. When I say that the best opportunities are in-house, they are in-house. I have no doubt that especially you invest 200 million and do an expansion, then building the shopping mall from scratch. The return on the expansion is much better because the terrain is already paid for, and the effect on the existing shopping mall is much higher. So there's no doubt. It's intuitive. Oh, you can look at the portfolio. Well, give me the best terrain in Brazil because, as I told you, doing the greenfield is connected to expectancy. You look at the last phase of big development of shopping malls in Brazil, it was pre Olympics, the World Cup. So the expectation was very high. We've done three. We've launched three in 1 year. Good morning. Marcelo Mota, JP Morgan. You can comment on the expansion of Morumbi. How are the contract conditions? You commented 90% pre-allocated. I wanted to understand if you have the average of the rent vis-a-vis the average of the shopping mall. What are the clauses and what can you open? And amongst all these expansion, how do you see the average of the rent of the expansion with the shopping mall when it's open, and how does that evolve all throughout time? Your name? Marcelo. Thank you. We managed the rents with what we predicted in the viability study for the expansion. So Morumbi Shopping is the equipment that is very strong, that sells itself. The expansion not only in terms of percentage of what was occupied, but in the quality of what we are bringing to it, it indicates that it will be an expansion that is well successful. And answering, well, I don't have the numbers, but we are allocating it in the thresholds that we've predicted in the viability study for the evaluation of the investment. And to complement what Marcelo said, within the threshold of prices and return that we want to have, and the quality that we want to have, which is also important, well, it's not that it's 100% allocated. No, it's not that. It's with the return and the quality that we want to deliver to the consumers and the shopping mall. And there is a point. And it explains what Vila Olympia suffers today. Vila Olympia was done way back when, and it was a partnership. It was us, Brookfield, and then the family that was owner of the terrain. Everything was rented in the biggest value of rent, and it was a mixed. And then you have a point. This is the point for Morumbi. I could have had a profitability much better, but a horrible mix. And then that has a short flight. So this is not a 100-meter dash. This is an ultra marathon. So we're looking to the future. Quality of what is getting in really weighs in a lot. Because of the time, last question from the audience, and then we can close. From Morgan Stanley Moto. A question about the selling of terrains. This was very common last year. Wanted to understand if this is a strategy of the company to maybe it will happen in the future. And I just wanted to understand because the other players are doing this. We decided to sell the terrains that we're not going to develop. So I cannot be my own enemy because I purchased everything around the shopping mall. And in the case of Ribeirão, and then it ends up that we are enemy of the shopping mall because that is not developed. We had projects. Ribeirão Preto is not a company, not a city that we have a margin to do the real estate that we think that is reasonable. So we have hospitals, every offices. We're going to continue to look at it in this way, yes. What I cannot develop, I will sell and bring more money to the company. Well, thank you very much for your presence. And also at the RIR website, you can see all the questions. We will answer all the questions that were unanswered. So, as we've said, we are at 1 p.m. and now I give the floor to Eduardo. Well, thank you to all of you that have come to our house in Multiplan, São Paulo. This shopping mall, I had the pleasure of being at the launch in 82. 82. I was 12. And to do a meeting with your participation and being close to you and talking to you is different than you seeing the people in a monitor. This meeting wouldn't last half an hour. So this explains the success that we have in the shopping center, that the people are meeting versus the online purchasing. Both have their spaces. I believe, and I am certain, that human beings don't live without each other. People need each other. We need everything that is happening to meet, to see each other, to exchange experiences and synergies. And I would like to thank you all. It was a wonderful afternoon. And the company is ready to grow another 50 years. Homework is done. Thank you very much.